British American Tobacco Bangladesh Company Limited, Batbc manufactures and sells cigarettes in Bangladesh. Batbc markets its products under the Benson and Hedges, B&H, Gold Leaf, Capstan, Star, Lucky Strike, Royals of London, Derby Pilot, Hollywood, etc. brands. Batbc exports its tobacco leaves internationally. The company was formerly known as Bangladesh Tobacco Company Limited and changed its name to British American Tobacco Bangladesh Company Limited in 1998. The company was founded in 1910 and is headquartered in Dhaka, Bangladesh. British American Tobacco Bangladesh Company Limited, Batbc, is a subsidiary of Raleigh Investment Company Limited. Assalamu alaikum, hello and welcome back to my channel. Today's company, British American Tobacco Bangladesh Company Limited, Batbc, sector food and allied industry, food, beverage and tobacco, consumer staples, tobacco. Financial modeling, let's start. Income statement. Turnover in the year 2018 was 5,464 crore BDT. Subsequent years, 5,600, 6,000, 7.4 thousand, 8.4 thousand and 9,167 crore BDT. Revenue growth rate was 5% in 2018, later 4, 6, 24, 13 and 9% last year. Gross profit margin was 49% last year and operating profit margin 38%. Net income was 1,788 crore. Net profit margin 19.5%. Company paid 100% cash dividend, lowest in 6 years. EPS was 166 in 2018 when number of shares was 6 crore and EPS was 51.4, number of shares 18 crore, EPS 60 and later 27.7 when number of shares were 54 crore, and to that 33 and 33 continuing. Debt equity ratio 0.17 times. Company share price was 3,434, later 1,300, 907, 536, 550 and last year 518.7 in 2023. Let's forecast. In this forecasted period, revenue, according to me, revenue decline is expected due to high inflation and reduced consumer disposable income. It will likely leading to decreased spending on non-essential items like tobacco products, which will impact British American Tobacco Batbc sales negatively. According to me, the company may experience a contraction in sales as consumers prioritize essential purchases amidst economic challenges and impacting overall revenue growth negatively. And with that in mind, I am giving revenue growth rate as negative 4% in 2024, later minus 2%, 1%, rebounding somewhat, and 3%, and ultimately it will hit GDP growth rate 5.6%. And with that revenue growth rate and gross profit margin, operating margin given like this, company's estimated EPS in 2024, according to my calculation, is 32.6, later 30.5, 28.5, 29.6 and 31.5 in 2020. Income statement of Batbc and 5-year forecast. Okay, balance sheet. Total asset was 5,654 crore BDT and last year it was 10,387 crore. Current asset 6,300, non-current asset 3,686 crore PPE. Total debt 754 crore BDT. Capex was done about 610 crore. Great. Net asset value was 492 taka in 2018, and last year it was 99.3 in 2023. As per my calculation, net asset value will ultimately increase to 247 level in 2028. Balance sheet of Batbc. Cash flows are like this. NOCFPS was 18.9 in 2023. Ratios: current ratio 1.58, quick ratio 0.79, cash conversion cycle 127 days, almost doubled from 2022 level. ROA 17%, ROE 33%, and ROCE 56%. So far so good. Cash dividend of 100% was given, so dividend yield is very poor, only 1.9%. If the same amount of dividend is given, it will be 2.4% dividend yield. P ratio was 21 in 2018, later 26, 15, 19, 16, 15.7, and 15.7 currently in 2024. Price to book 4.1 times. Vertical analysis: the company's sales is 100 taka, cost of goods sold 51, GP gross profit 49, SG&A 10, operating profit 38, bottom line 20. Previously it was 18, 16, 18, 20, 21 level. As per my forecast, it will be 20, 19, 18, 18 level for the upcoming years. Schedules: capex schedules are like this. Depreciation about 294.4 crore BDT in 2023, and these are my estimation. Debt schedule and estimation, working capital schedule and estimation. Calculate WACC. As per my calculation, weighted average cost of capital is 8.4%, equity 88%, debt is 12%, market cap 22,048 crore, free float 26%, promoters are holding 74%, and with that 8.4% WACC and terminal growth rate given 1%. Free cash flow to firm estimates are like this. Company's intrinsic value via DCF approach is 375.5. Latest price 408, telling me not to invest right now. Sensitivity table given here. Important numbers. CFO method regression forecasting. This is valuing as 314. Dividend discount model, I am expecting 250% dividend in 2028, and these are in between. Intrinsic value 230 based on dividend. Relative valuation now. Implied share price is 884, telling me I can buy. EV by EBITDA method, implied share price is very important measure, 1034 with an upside of 153.4%. Okay, telling me I can buy. P ratio, fair price based on that is 850, telling me I can buy. Latest EPS 33 and latest NAV 99, and implied share price based on that is 272, telling me not to buy. Okay, Benham score forensic accounting checking. Company's account was clean, green, not manipulated. Piotrowski profitability, leverage, and operating efficiency checking. Average company. Altman score bankruptcy checking, safe zone, no chance of bankruptcy in the near future. Football field, current price 408 shown in the red dotted line, and all the other valuation and pricing figures are also shown in the graph with 1 year and 5 year price range. See for yourself. So this concludes the financial modeling and evaluation of Batbc, British American Tobacco Company, Bangladesh. Thanks for watching and happy analyzing. Ta-da!